we're probably going to see trillions, if not tens of trillions of dollars of stablecoins.
It's pretty convenient that they misplaced a lot of texts and emails.
Which is insane. Like, someone should seriously look into that.
That affects the on-chain economy.
Alex Svanevik is the co-founder and CEO of Nansen, the on-chain analytics platform used by top funds, traders, and protocols to track capital flows, wallet behavior, and crypto's power players in real time. With a background in AI and data science, he's helped turn blockchain intelligence into an edge for the entire industry.
Can you destroy like a multi-billion-dollar business overnight?
Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
Well, let's talk about it. The new Nansen mobile app is live on the App Store.
That is right.
And it is the best agentic experience in crypto.
Yes. Exactly the words I would use.
All right. So yeah, tell us more about it. Why is it the best agentic experience? What's possible on there?
It's pretty funny because our domain name is nansen.ai. And for a long time, people were like, what's the AI angle? But we always used AI behind the scenes a lot in the product to label addresses. We have like 500 million addresses labeled. And a lot of that is agentic, right? So we have literally a team of AI agents that go out and figure out who's behind this address, for example. But now finally AI is making its way to the front end. And so the number one problem we've had with our product over the years is that people find it hard to use. Yeah. It's like, where do I start? You know, which dashboard should I look at? Which table, which metric is the highest alpha, whatever. So we thought, why don't we just think about what investing looks like in 2030 and then try to build that today. And I think for a lot of software products, the user interface paradigm is maybe going away and you're going to just be talking to AI agents instead. And so when you download the app, there are essentially two things you can do. The first one is to set up your portfolio so you can track all your on-chain holdings in the app. This is not that different from like a D-Bank or a Xerion or a Zapper. But the cool thing is that you have an AI agent that has your portfolio in its context when you talk to it. And it has literally every on-chain transaction at its fingertips. So that means you can ask it, you know, what are the meme coins that smart money has been buying in the last 30 minutes on Solana or Base or any chain you use. And it has access to that in real time and can pull it out to you in seconds. And you can choose between a fast mode and an expert mode, which is pretty, standard for AI products. Fast mode, we're aiming to get your response in like less than 5 seconds. The expert mode takes a bit longer, but it researches things very deeply. And it's pretty amazing what it can do. Like if I go on a podcast, I will actually just ask the agent before I go on. If it's about a specific chain, I'll be like, tell me about what's happening on Sonic. In the last 30 days, what are the most interesting things? And it does the actual on-chain research for me. And I could even ask it like, well, what about the last 30 minutes or the last 15 minutes, or the last 5 minutes? And I can even paste in like a transaction hash. And so you have like an agentic block explorer. And it tells you, oh, this is a user that sent 500 USDT. They tend to use like casino products like Rollbit. They're depositing that into Bybit probably for their account. Okay. And it's like a completely novel way to just navigate the blockchain, essentially.
Wow. I think it's pretty intuitive where this is going. It's going towards, okay, I can prompt it. I can ask all these questions. I can ask what smart money is doing in various timeframes. It can give me that information. I can eventually, I'd imagine, say, just do it for me. You have context now on my risk tolerance and my preferences when it comes to my trading portfolio. Go and execute some of these transactions.
I love that you went there directly because that's exactly what we're going to do. And so I think the next thing, that's happening with this app, like we gave it to users so that they could start using it now. But the obvious next thing is, hey, I want to be able to execute transactions from this thing, right? Like now I've discovered these tokens. I want to be able to pull the trigger within the same app. So that's going to launch in November. And I think what we'll see is that as people do these kind of agentic trading, they have these agentic trading experiences, You do that like 5, 10, 15, 20 times, and they're going to have that feeling like you just described, like, hey, why don't I trust this thing because it clearly worked for me these times when I was in the loop. Yeah. Why don't I just give it an overall strategy? And then I let it execute on the strategy, and then I monitor it and check in. And I think it's pretty analogous to how like a Tesla full self-driving roadmap looks like, right? Where like you have your hand on the wheel, but you like if Tesla launched today and no one had heard of it, I don't think you'd be comfortable just sitting in it and like, okay, take me there and like hands off the wheel. Right. But they've built up the trust with their customers where they've literally had their hand on the wheel for years. And, you know, you let it run like more every time. And eventually you're like, okay, I trust this thing. Yeah. It's going to take me from A to B. Of course, where the analogy breaks down is that every investor is different. And there are lots of different destinations you might want to go to and different ways to get there. So I think you also need it to be highly personalized. Like you have different trading preferences, different trading strategy or investment strategy than I have. And the agent should basically accommodate for that. So yeah, I mean, I think people are going to look at this as vibe trading, you know, vibe coding. Yeah. Vibe trading is going to be the next meta. Yeah. And I've been using some prototypes for this internally with trade execution. And it's just way more fun. Like personally, I find it much more fun than like clicking around on dashboards, like looking at the price chart. You want something that is more fluid, more fun. And I think AI is great at lubricating these kind of complex processes and just taking away everything that's friction and annoying. Right. And then just lets you do the thing that you wanted to do in the first place.
I can imagine a social element to this as well, where right now, again, we're prompting these things. Maybe it's prompt plus execution. And then in a certain sense, it's just autopilot. But I imagine one intermediate step before getting there is suggestion-based algorithms, where it has my context, it has my persona, and it can understand what it thinks I may want to trade or what I may want to know. Hey, do you want to buy this? Do you want to trade this? Do you want to send this or that? And then it's asking me, and I'm able to confirm. I'm able to say, yes, I do want to do that.
So the very cool thing about this app, even right now, is once you have entered addresses that you want to track for your own portfolio, the home screen has personalized pre-created prompts for you. You know, so it's like, imagine, you know, your portfolio is up and the main driver is Pengu, let's say. Okay. You know, hypothetical, could be Pengu, could be any token. Then there's a little card that says, why is Pengu up today? And so immediately you don't even have to think about, hey, what should I prompt it? Yeah. We've suggested prompts for you. And I think, you know, what the example you brought up too on suggested trades is interesting because I think actually that's what users would want. You start bordering like investment advice potentially, and it gets a little bit hairy, but I think you have to try to get like as close to that as you can without stepping over the line. Because I think at the end of the day, people do want help with their investments, but you can't claim, and obviously the AI can make mistakes. This is kind of like the cliche in the user interfaces of AI products, but it's true. You know, they can make mistakes. And so you have to be a bit careful. But I think at the end of the day, you don't want to just give the user like a carte blanche, you know, blank slate where you have to figure out what to prompt. You want to sort of guide them and make it smooth and easy. And I think it starts with helping them prompt it. And then maybe you do more things when you get trading live later.
That's a big philosophy around our show is user education. And we started out as DeFi Slate. We were doing tutorials and walkthroughs, helping people use on-chain DeFi apps, ultimately because these things were so foreign and no one really knew how to use them. And it was important that we help people understand, hey, this is what you can use this for, so that ultimately they can use it to accomplish their goals. And that's you know, the essence of technology. And so, yeah, the easier that it is for people to use these applications, the more likely it is that they end up collecting these wins. And they use this technology, your app, Nansen mobile app, for a win on chain. And then they come back to it and they continue to win.
I don't know about you, but as like a human being who's influenced by like emotions, FOMO, all these different things, it can be quite difficult to just look at your own trading or investment performance and get like a sober assessment. of it. And you can do that with the app. You can ask it like, hey, what are my top trades? What are some mistakes I've made? What patterns do you see in the mistakes I've made, right? And like, okay, based on that, now let's try to go and find some new investment opportunities, right? So I think that's another cool thing where you get a bit more of like a learning loop. And over time, we want to add more memory features, right? Where you can imagine that beyond what you see on chain, you could enrich the agent with information like, here's why I did this trade, or, here's overall what I'd like to do. And that memory file becomes just like your memory in ChatGPT or Grok and so on, makes it much more personalized and makes the agent more helpful. Yeah. So, yeah.
Well, Alex, I'd like to switch gears a little bit because Nansen is one of the biggest validators on Hyperliquid.
That's right.
And we've done
the biggest, besides the foundation. Yeah.
Besides the foundation, the biggest validator on Hyperliquid. And there's been all kinds of actions. Hyperliquid just continues to be at the center of attention, center of gravity for the industry. What is it like operating a validator of that size? What are some of the trials and tribulations you faced? I'm sure, adversity and, controversy. Maybe you could just tell us, any stories that you may have before we dig into specific.
The wait is over. The Talis testnet is live. Be part of the revolution. Join now at testnet.talis.network. Asset management redefined. Built on ERC 7621. Standardize how you launch, manage, and trade on-chain baskets. This is Alvara, the standard for on-chain asset management.
Hibachi.
Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire.
So the history here is that about a year ago, we'd been actually running a validator for Ronin, which is the Axie Infinity chain, for a while. And we thought this was interesting. It was a good way to kind of align incentives with that community. And we thought, how can we double down on this? Maybe do this for other chains. At the same time, there was a company called Stake With Us, a small Singaporean-based startup that was looking at potentially selling the company. And so we ended up acquiring that company. They had about $60 million worth of assets staked with different validators, about 20 different validators. And we realized that with Nansen's distribution and the product we have, we could basically supercharge their growth. And so, fast forward to today, we actually have more than $2 billion worth of assets staked with our validators. So the thesis turned out to be correct, more than 30x growth in a year. And one of the chains that we integrated early on after the acquisition was Hyperliquid. So I think it was maybe 27th of December. It was around Christmas that we decided to move with Hyperliquid. One of the founders of Stake With Us, Michael, was quite deep into that ecosystem. And so we decided to co-run the validator with HyperCo,
right?
Which is one of the kind of community teams in Hyperliquid. So we actually run it together with them. We run it technically because we have, a great team that's really experienced with security, infrastructure, and so on to make that happen. And then HyperCo is kind of our joint venture partner in that ecosystem, right? Because they understand the Hyperliquid ecosystem really well. They run events. Obviously, for the USDH vote, they were instrumental in how to run the governance process for it.
There was some controversy around that vote.
Yes. And, I want to dispel this myth that this was all determined up front. Of course, I can't speak for all the validators in the ecosystem, but for us, genuinely, we looked at all the proposals. We engaged with all of the bidders. We spent time looking at this. And at the end of the day, it was actually the stakers with our validator who ended up deciding to go for native markets. It was very close. Paxos was right behind. But we actually ran a process. We spent a lot of time internally. We created this kind of tabular points-based system where we counted stakers, but also we considered having our own sort of council internally vote. We ended up abstaining with that council. In other words, it was fully based on, stakers. Okay. But the idea that it was like predetermined is not true. Yeah. I think it's fair to maybe question the short timeline of like the RFQ process. But within that time frame, I think, we put a lot of effort into making sure that we looked at all the proposals. We even encouraged people who were on the fence to put in proposals to make it as competitive as possible. So yeah, that's kind of the backstory there.
And so maybe just, rehash why you chose native markets, because on the face of it, it was like, okay, well, Paxos, and there's relationships with Venmo and PayPal and all of this wide distribution. There was other, encouraging proposals from Athena, Frax even had. So what was the intention behind choosing?
At the end of the day, it was literally decided by the stakers.
Okay.
So like I could it was funny because we were talking about the comms around it. Like, should we really be spending a lot of time on why, the validator selected native markets? Because at the end of the day, the stakers decided. Right. But we looked at the proposals and we thought native markets was a great choice. But at the end of the day, it was decided by the stakers. Yeah. So I don't really have much beyond that to add.
Yeah. And so, native markets now has gone. They've staked and locked away. I think it's $200,000 hype. Yeah. Which is, quite a sum. And so now this kind of embarks on like this new era, right? And one thing that stuck out was that most of the stablecoin issuers said that they're going to continue to run they're going to continue to launch their stablecoins.
That's exactly what I was hoping would happen, actually, because these are fantastic ecosystem players. Like you want Paxos and you want Athena and you want all these guys to build in your ecosystem. And I think they're going to do super well. Yeah. So besides the ticker, I think these stablecoins are going to crush it.
Yeah. So from your perspective, running, one of the highest validator, like what do you think comes next? What does this next era of Hyperliquid entail?
Oh man, it's tough. I mean, like
it's packed with so much stuff.
The funny thing with this overall governance process, like, man, Hyperliquid even managed to make governance fun. Like they can do anything.
Yeah.
Because when was the last time governance was fun?
DAOs haven't been cool for years.
Yeah. Maybe MakerDAO had some fun stuff going on back in the day. I remember some fun proposals. But yeah, what's next for Hyperliquid? I mean, clearly there's a lot of competition right now, right? And, I've talked about this before. I think in crypto, almost every narrative or every innovation follows a 3-stage process. Stage 1 is the innovation. There's one singular product that is the innovator. In this case, for like a full stack perps DEX, it's Hyperliquid. Stage 2 is you get the clones, which are slight variations of that same concept. I don't think I have to mention names, but there's a bunch out there now and probably more coming. And then stage 3 is what I call industrialized oversupply. Someone figures out a way to manufacture clones.
Ooh, okay.
Right? And so if you look at, say, meme coins, same pattern. Dogecoin was the innovation. Pepe, Shiba Inu, and so on were like the clones. And then arguably Pump.Fun is the factory that generates literally 84 million meme coins, right? So it's like, and, do the same thing with NFTs, do the same thing with ICOs, do the same thing with layer 2s, like
decentralized exchanges too, Uniswap V2.
Totally. Yeah. Right. So it's like innovation, clones. I mean, clones maybe is a harsh word, but like variations of the innovation.
Right.
And then industrialized oversupply. The funny thing with Hyperliquid is that there's a project called Based. Based.one is their website. Little plug there. They have created essentially like the WordPress of Hyperliquid DEXs, where you can just deploy your own front end.
Okay.
And on the back end is Hyperliquid and the builder codes.
Okay. Yeah.
So the smart thing about that, if you think about it, is that maybe industrialized oversupply is all a bunch of Hyperliquid front ends.
Right.
That would be fantastic for Hyperliquid.
Right.
And I think it would make a lot of sense, because do you really want to run the full stack infrastructure, or do you just want to have a perps DEX that has great liquidity, and sure, you're paying some fees to Hype, but at the end of the day, it's probably worth it instead of trying to build your own.
Well, as you were describing this, I'm trying to think out, who are the winners, because sometimes the innovators get innovated, right? Like if there's an industrial pump is doing quite well, the industrialization of the oversupply, they have a moat in terms of the volume in which they can produce the supply of these things. But the clones rarely ever kind of supersede.
It depends. It's interesting. Like you could look at, I think in NFTs, some of the clones have done well, right? Like arguably Pudgy Penguins is a clone, right? Like the first one is probably either punks. I think for PFP, so I'd say punks is the innovator.
Yeah.
Then you have like hash masks, you have Bored Apes,
Right.
you have Pudgy, and then you have a bunch of other ones. And eventually you got to like ways to just manufacture NFTs, and none of those are doing well.
Right.
So I think some of the clones can do well
Yeah.
also, but typically not as well as the initial one. Ethereum itself also followed the same path, right?
Yeah.
Like Ethereum's the innovator. Then you have like, you know, EOS, Cardano, like smart contract platforms that didn't do super well. But of course, some of them have done well later. And then Industrialized Oversupply is arguably like layer 2 frameworks.
Right. And it comes back to Ethereum.
Yes. Yeah. So it's actually kind of analogous to Hyperliquid in that sense, potentially.
And I think it has this bimodal distribution where both of those tend to do well. The clones, I think fewer and far between, but on most cases, you have the innovator that does quite well in the industrialization.
I think the factory can do well in the industrialization, and some of the results maybe. But this seems to be like a pattern. If you look at ICOs, you look at smart contract platforms, you look at layer 2s, you look at NFTs, you look at meme coins, you know, it tends to happen in a lot of these narratives. So it's kind of funny. But I think as an investor, you have to be mindful of like, oh shit, this is clearly like stage 3. You know, like, you know, how do you position yourself in stage 3? Maybe it's time to sell some of the stage 2 holdings if you have some of those.
That brings something up, which, you know, Paolo from Tether recently said he's like 0.25 out of 100 on this. Like,
dude, Tether is the same. Stage 1, Tether, the innovator, right? And then
USDC, right? Industrialization. We have all these things. So I'm actually curious, like, where do you think stablecoins or maybe some of these other categories, like, are we getting overextended on some of these and we're still quite early on others?
Well, the interesting thing with stablecoins is that they're not investable. Right. You know, in the sense that, I mean, some of them you have like, you could buy, you know, Athena's token instead of buying the actual stablecoin and you're betting on it, right? Or you could buy Circle stock.
Plasma, these, like, what is smart money saying about plasma?
You could buy infrastructure, right? So there's ways to bet on it, even if you can't bet directly on it. I mean, I think stablecoins were like super early, actually. And maybe one thing to, you know, to sort of call out here is that the narrative I'm describing, right? Obviously, there's a big difference if the overall narrative is sustainable and has like is useful. And stablecoins clearly are useful. They have product market fit. So I think we're super early on stablecoins for sure. I mean, we're probably going to see trillions, if not tens of trillions of dollars of stablecoins be minted in the next years. So I think overall I feel like that's just going to do, but super well. But I think you might see more white labeling, like arguably Paxos. That's what they do, right? They white label stablecoins. They had Binance USD. It was super successful until Gary Gensler killed it, which is insane. Like someone should seriously look into that and see how can you destroy like a multi-billion-dollar business overnight, because Paxos was, I mean, it is a great business. Binance USD was a great business.
Pretty convenient that he just misplaced a lot of texts and emails that he was supposed to retain after his term ended.
It's insane. Yeah, it's shocking actually. And it must be really frustrating if you're like at the other end of that.
Well, now CZ has Aster and he's doing quite well. So that's quite all right. I'm curious actually, when you're looking at, stable coins actually, because this is something that is quite early. And I think this is something that, you know, very rarely do we have CT in agreement on, you know, several on really just one thing. But the consensus does seem to be that there is, and maybe it's just coming straight from, you know, the Secretary of the US Treasury saying that there's going to be 3 trillion in stable coins. How do you think that affects the on-chain economy?
Blockchain shortcuts, templates, and widgets launch without friction for builders by builders. Visit enso.build.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions, fast, reliable, everywhere. Start swapping today, only on Relay.
I think the way to zoom out from stablecoins is that they are an example of a traditional finance asset making its way on-chain. And clearly, dollars aren't the only thing that should be put on a blockchain. So I think if you sort of like broaden the aperture, securities, stocks, real estate, all of this stuff is going to come on chain in the next years. And I think it's going to literally like dwarf all of crypto, right? Because crypto is tiny. Yeah. And I've said this a few times before, but I think when you write the history of crypto, like 2040, 2050, you write the history of crypto up to that point, this first era is going to be called like the toy world era, where we had all of these tokens created. Frankly, most of them were valueless, right? They were kind of worthless, speculative.
Very experimental.
Very experimental, right? And it's like, I say that, and maybe it sounds harsh, but it's not really criticism. It's just like a fact, I think. It's just the way it is. And that era was crucial in order for all the infrastructure and the products to be built. But the real world era is going to bring like 10, 100,000x more value on chain, right? And so like, why shouldn't, Nansen equity be on chain? Yeah. Why shouldn't like Wintermute stocks be on chain? And then also public companies, obviously. But I think there's a bigger value add by having private equity come on chain. And, why should you have to own a piece of property 100% or nothing? Sure, you have REITs and stuff like that, but like if you're a young person, the way it works today is you have to take up a mortgage and own the whole house, and now you have a lot of debt. Like, what if you could just buy, 1% and you could accumulate a position in your home over time, right? There's a lot of these things that I think in hindsight are going to be kind of obvious, and it's going to look silly the way we bought houses and like the way we owned stocks and that kind of stuff in the past. So I think that's really the thing that's going to make crypto so much more valuable. And if that thesis is true, you have to think about what are the things you want to own today of crypto native assets, and what are the things you probably don't want to own, right? And to me, I think owning layer one assets is a good idea. Possibly some layer two assets too. I think owning things like Aave, Camino, that obviously are going to benefit from a lot of value coming on chain. Right. It's probably a good thing. But there's a lot of stuff that is like high up in the stack that I think possibly it's not going to do very well because it's going to get crowded out by real value.
It's interesting to hear you call out the lending markets, Aave and Camino, as the primary beneficiaries of more value coming on chain.
Yeah, because you'd want to, like, if you have, Google stocks, or you have like, your home, maybe not the home is this tricky one. Admittedly, it's going to take a while before we get there, but you'd want to collateralize that probably and like just borrow money against it. And that's just very convenient. And it's what people do in, wealth management and private banking. If you, are at a higher echelon of wealth, right? But if you can make that accessible to anyone who has savings through DeFi, I think that's super exciting, and I'm really bullish on that.
And generally, the blockchain mechanism is it enables collateralization, which I think there's kind of two ways that you can look at it, and probably many more. But one way is you can take collateralization. You can say, okay, that is going to lead to more leverage in the system. It's going to lead to more rehypothecation and bad. But then the other way is like, no, we actually can build a much more efficient system where we have a better understanding of how much money is in the circulating supply, where the leverage exists at any given time. If it's transparent, and blockchains by virtue of their verifiability should make that transparent, at least if it's on public blockchain. I'm curious, as we build further and further into this direction, we bring more and more on chain. A general question about the hyper-financialization of the world. I've had conversations, usually conversations with my normie friends. They don't like this hyper-financialization. But then any kind of like libertarian-minded, independent thinker, markets-driven person is usually make a market, make it more financialized as a way of kind of understanding the truth of the matter and understanding the world around us. Yeah. Where do you stand on hyper-financialization?
I'm probably more in the Milton Friedman camp of if people own things, they take better care of them. So I think it is good for the world if people own things. And generally, I think we should strive to create a world where billions of people are owners in some way, instead of a world that the World Economic Forum preaches, where you will own nothing and you will be happy. I think, the better future is you'll own something and be happy. And so what we probably don't want to do is, have people waste a bunch of time on like financial acrobatics, but we should give them easy ways to become owners, whether it's in their own homes, whether it's, in companies that they believe in, or networks that, they use. I think these are good things, but we have to make it quite easy for them. And then people can kind of choose their own adventure with regards to how deep down the rabbit hole they want to get. Yeah. But I think actually like collateralization is interesting because it could be that you get almost a bifurcation of like hard money and soft money, because you'd save in hard money, Bitcoin, ETH, Sol, like whatever you believe in. And you save that in your sort of DeFi bank, so to speak. And then when you need to consume, you just borrow against it. So, and as long as you have a healthy buffer so that like a drawdown is not going to liquidate you, that seems actually like a better way to do your personal finances, potentially. But you do need to have a certain amount before it makes sense, right? And like today, those types of products are really only accessible to wealthy people through wealth management. But DeFi kind of makes that available to anyone. So I think that's pretty exciting, and maybe will have profound implications for like fiat currency and how people save and so on and so forth.
You mentioned people owning things, like being stakeholders in their networks and in their goods. This is a core tenet of the network state, which is Balaji's philosophy.
I've been to his school across the border down here.
I was going to ask, he's got this thing on Friday. What is, I can understand a lot of the, the same learnings and teachings that come from there. What was that experience like when you were there at the network school?
It was great. So I did a kind of founder to founder session where I was talking about my experience building Nansen to a bunch of founders who were at network school. And I also did one-on-ones with a bunch of them, sort of back to back, like 15 minutes talking about their products. And I think it was great. I mean, it's still at the kind of early stage. I'm a big believer in what he's building. And it's also pretty smart to place it there. It's in Forest City, which is kind of this semi-ghost town, which you might be familiar with the history of in terms of the real estate development. But it's actually it's a great facility. And it's very spacious. It takes on a good day, maybe 1 to 1.5 hours to get there from Singapore. So it's very well connected. And I think I would love to engage more with the network school actually. And I'll probably be back there soon.
Well, what do you like about it so much?
I mean, it really has this feeling of kind of, it's futuristic in a way, like people are building the future. And it's good to be among other builders as well, I think, because it creates this like atmosphere where you can do anything and like you can push the boundaries. And like I said, it's like literally a pretty large physical area. Yeah. And so it doesn't feel crammed at all. It feels like you could kind of just sit anywhere you want. And like they have even pretty, they have some like Brian Johnson inspired foods you can get. And like, so the whole thing feels very like forward leaning and like optimistic about the future.
And what do you find most appealing about the network state philosophy?
Oh, that's a good question. I mean, I think generally as someone who, so I grew up in Norway, and I think over time, as I've lived abroad, I've sort of become almost more connected with people through crypto. That's like my first community in some ways. And I feel a belonging to that community. But obviously crypto is not a nation. And so it's hard to be like patriotic about crypto. But I think what he's doing is trying to take that feeling and make it into something that is more tangible. Yeah. And so I think a lot of us we relate to that feeling, and we would like to be sort of members in that overall like ecosystem. And so it's a little bit, intangible and like hand wavy. But something about it tells me that, there's something there. Even nation states are like abstract notions, right? And I kind of like the idea of cities more than nations in a way, because you live in a city. You don't live like in a nation in a way, like in a country. Yeah, the country notion is like, hey, we have a flag, we have maybe a common language, we have shared history, like you learn stuff, but it's much more abstract. And so if you could do like city and then totally like virtual, nation, I like that concept.
I was speaking to Yatsu from Animoca Brands about this, and he said the only difference between a network state and a nation state is a military.
Arguably, yeah, and maybe some land, but yeah.
I could imagine a scenario where a network state effectively hires its own military.
But how, like maybe that's like a cybersecurity military of sorts that protects its citizens like virtually, which actually is something that's going to be, more and more important for people, especially in crypto, to keep safe. But yeah, I think like experimenting with the notion of like what a nation is a good thing. And I went on a walk with Balaji after he moved to Singapore. I think we moved roughly around the same time, Singapore. And clearly this is a guy who has a lot of super interesting ideas. And just being kind of part of what he's doing and just seeing where he's going. I think actually like a great part of leadership is that you just want to follow someone, even just to see where it goes. You just out of curiosity. And that's the feeling you get with him and what he's doing. You just kind of want to see what it ends up becoming over time. And I think the overall vision is the right one. It's like quite timely for where we are now in history. And so who knows, maybe we'll both have, network state passports in a couple of years.
Yeah. Sounds great. That's been the nature of our angel investing, is just genuinely curious, see where it goes. Yeah. Well, Alex, thank you so much for coming on, man. It's been a pleasure, because I think you've got a bird's eye view of this industry, which, some people are so zoomed in on meme coins or this or that. You can really connect a lot of the dots. And I think that is very valuable when it comes to drawing some of these insights. So thank you for sharing.
Thanks for having me.
Yeah, absolutely.